WGHC 98.3 FM.
Hey, WGHC 98.3 FM would like to help you out. If you have a business or an event you would like to have us advertise for you, then we have some great packages for you to check out. Some of the packages include sponsored events, 30 to 60 second ads, and more. We have advertising space on our shows available starting at $200 and up. Send us an email at 98.3fmwghc@gmail.com to get more info. Also on our Facebook page at WGHC 98.3 FM. Don't forget to follow and like our page.
All right, thank you all for tuning in to WJC 98.3 FM, your voice and music, your station. My name is Jeff Badu, and I am a parallel entrepreneur and a wealth multiplier. I'm the founder of Badu Enterprises, LLC, which is a multinational conglomerate in the financial services. We provide a suite of financial services, including tax preparation, credit repair, property tax appeals, financial consulting, and services of that nature. I'd like to welcome you to the show Money Talks, where all we talk is money. This is 2020, and this is a brand new year. So we'll be talking about a lot of great topics throughout the year, every Monday night at 7 p.m. Central. You can catch us live on WGHC 98.3 FM, your voice and music, your station. You can also catch us on online, WGHCFM.org. And we're always streaming live on Facebook as well. So anytime you want to go on Facebook, you can find me live at Jeff Badu. So today we'll be going over a 2019 market recap. So we'll be looking at how the stock market performed in 2019. 2019 was the best year in the stock market that I've ever personally witnessed. These gains will shock you. They will make you feel stunned. So we'll be going through a market review, and then at the end we'll also see how we've performed so far this year. A few things to note. I just released my second book today. It's titled 7 Figures, How to Become a Millionaire. If you need a free copy, please email me at jeffbadu at gmail.com, jeffbadu@gmail.com. I'll send you a free digital copy of the book. You can also just find me on Facebook at Jeff Badu. I'll be doing a more formal book review, just so you have a chance to really see some of the things that the book is really about. I've already had a radio segment about it, but ultimately, this is something that I think will help out a lot of people. It's a free book, so this is a book of no charge, and definitely hope you guys check it out. So that's second book. I mean, basically just going over the principles of what you need in order to become a millionaire. There's certain secrets in the book that you won't really find in a lot of places. So it was just one of my tokens, one of my treats for 2020. 2020 is a big year for a lot of people, big year for me personally. There are a lot of milestones that will be hit this year. So hopefully you guys are going to be a part of the success. And another secret is my foundation, the Badu Foundation, will be launched this year, in the middle of this year. So let's go through it. So 2019, wow. I mean, I must say I was quite impressed with 2019. 2018 ended off really bad. It started off great and then just went downhill from there. But 2019, it was like a bull that just kept riding and just kept riding and just kept riding. I mean, I could not recall a single month where we had a down month. Everything was up. The stock market was up. So let's just go through the content, and then I'll explain to you what this content actually means. So overall, the year began with the government stymied by a shutdown. So as you all may recall, in 2019, at the very beginning, while I was in Ghana, we actually had a shutdown. It actually happened at the end of 2018, leading into 2019. So the government was shut down. The IRS was basically shut down. Everything was shut down. Some people couldn't get passports. I mean, we thought the world was about to end at that point. But thankfully, the government was reopened, and essentially the stock market kept doing well. Now, the year ended with articles of impeachment. So we started with a shutdown, and then we ended with an articles of impeachment levied against the president, Donald Trump. In between, both domestic and global economies showed signs of slowing, all while the trade war between the United States and China loomed throughout the year. Nevertheless, investors remained relatively bullish towards stocks, meaning the stock prices kept going up. Bullish, if you hear the word bull, it means it's going up. If you hear the word bear, like a polar bear, that means stock prices are going down. So investors remain relatively bullish towards stocks, pushing several major indexes to record highs. Now remember, we'll be talking about what's going to happen in 2020, my predictions for 2020. And some of the content will also give you some hints. But I do have a few predictions for 2020. Some good, some bad, but we'll get to that in a second. While domestic economic growth may have slowed in 2019 compared to 2018, it showed resilience and stamina. The third quarter gross domestic product, or GDP, expanded to an annualized rate of 2.1%, moderately down from 2018's 3.0%, yet still strong enough to outpace global economic growth by a considerable margin. Consumer spending, which accounts for about 2/3 of the U.S. economy, which is huge, by the way. When you spend money, it accounts for 2/3 of the United States economy, surged, buoyed by a strong labor market. So the labor market was strong, meaning jobs were created. As you may know, the tax reform came out at the end of 2017, which lowered the corporate tax rates, which essentially helped push more jobs. Or that was the goal, basically, is to create more jobs. It was called the Tax Cuts and Jobs Act. So apparently the tax reform actually worked because there was a strong labor market. Jobs were actually created, and near record unemployment. So I would say one of the benefits of the tax reform is this data that we're looking at right now. And remember, the numbers never lie. The data that never lies. The truth is the truth, no matter how you want to dress it, no matter how you want to play it. The numbers don't ever lie. That's one thing I've learned in life. So we had solid wage growth. So wage growth was pretty good. And a bargaining stock market. So the stock market was just tremendous. All told, the domestic economic expansion continued into its 11th straight year, the longest run in U.S. history. I'll repeat that again. The domestic economic expansion continued into its 11th straight year, the longest run in U.S. history, meaning that right after the recession in 2008, we've had consistent economic expansion, meaning the economy has actually grown 11 years in a row, and I predict in 2020 it will be a 12th year in a row. I do not predict a recession in 2020, by the way. So anybody who tells you there will be a recession or anything of that this year, I think is just foolish talk, for lack of a better term. Last year saw trade disputes between the United States and several of its trade partners reach an accord. But the trade war with China roared. The world's two largest economies engaged in a tit-for-tat skirmish, with each country volleying tariffs on their respective imports at the expense of the exporting nation. Coincidentally, a limited deal was announced just before the holiday shopping season, with the U.S. agreeing to forego new tariffs and China assenting to allow more U.S. agricultural imports. Further negotiations are presumed, but the relationship between the economic giants remains tenuous at best. Not only did the ongoing trade war affect global economies, but it also impacted domestic business investment, industrial production, and exports. part of the justification cited by the Federal Reserve. So one thing about the Federal Reserve last year, they cut interest rates last year. But part of the justification cited, this is very important right here to pick up. Part of the justification cited by the Federal Reserve, or the Fed, for lowering interest rates 3 times last year was weakness in business, fixed investment, and exports. So that's what they claim. That since there was a weakness in fixed investment and exports, that's what caused them to reduce interest rates by 3 times last year. So they want more people to invest, basically. And the more people invest, the more we're able to essentially invest and grow the economy. As of November, new orders for durable goods were down 1.3% from the same period in 2018, and business or non-residential investment fell 2.3% in the third quarter. The new year begins with a strong stock market and solid economic growth. The Secure Act, passed in late December, should change the retirement planning and saving landscape to some extent. However, the Treasury budget deficit. So one thing to note about that, there was a new retirement act actually passed. A lot of people probably don't know this, but the retirement plans have changed, or retirement rules have changed a bit. For example, the increase in the required minimum distribution age. And we'll get to that at a later time. But the Treasury budget deficit for fiscal 2019, October 2018 through September 2019, exceeded $980 billion, 26% higher than the 2018 fiscal year deficit. So that's a bit scary. I mean, that could cause a recession. Your deficit exceeds $980 billion. That means you're basically in debt. You're basically on the verge of bankruptcy as a government because you're so far in debt, basically. Or your budget, you have a budget deficit, meaning that you need some more money from somewhere. Whoever knows where that money is going to come from. The trade war with China may cool with more mutual concessions or accelerate, which would continue to dampen global economic growth. The new year will begin with the impeachment process, very important to note, and with November's presidential election. So in 2020, we have an election. A president will be elected, not just in the U.S., but in many places across the globe. So that's something very important to pay attention to. If there's anything that will cause a recession, it is this fact right here of the whole presidential election and all this crazy stuff going on. I'm sure you guys have probably heard there's pretty much a war right now between Iran and the U.S. Basically, I mean, I don't know if it's official yet. I just came back to the U.S. today and have been paying attention to the news. Oh, yeah, by the way, just basically had a great time in Jamaica. It was a fabulous place if you guys haven't ever been there. Awesome place, great weather. I thought I was in the summertime. Then, of course, came back to the cold this morning. But so what happens in between is anyone's guess. Right now, it's 50-50. People are saying the economy right now is iffy. There's so many unknowns right now. Will unemployment and inflation remain low? Will stocks continue to experience growth? Who knows? I think they will. Will oil and gas prices moderate or surge? And let's see what's next. And will the domestic economy continue to accelerate or suffer a setback? Can the world economy recover, or will it continue to stagnate? There's a big stagnation right now in the world, the global economy, not the U.S. economy, but the global economy. If nothing else, 2020 looks to be a very interesting year, to say the least. Now let's look at how the market performed. The Dow Jones from January 1st, or let's say December 31st, 2018, to December 31st, 2019, was up 22.34%, which is huge, by the way. That's the Dow Jones Industrial Average. The NASDAQ, which is composed mainly of technology stocks, and that's what my portfolios mainly consist of, and it was the outperformer of or was the highest performing index, essentially, out of everything that I'm about to read today. So the NASDAQ was up 35.23%. Humongous gains in the technology world. Which makes sense. Technology just keeps advancing. Why would you not be in technology stocks? It doesn't make any sense. S&P 500 was up 28.88%. Huge. I've never seen gains like that in my lifetime. Russell 2000 up 23.72%. Global Dow up 18.80%. And more good news. The Federal Reserve cut interest rates 3 times last year by 75 basis points, or 0.75%. So our current benchmark is at 1.50 to 1.75%. 10-year treasuries did pretty poorly, as you can imagine, because equities were high, so who wouldn't want to be in equities? 10-year treasuries were down 77 basis points, so they closed the year at 1.91%, which is below inflation, by the way, which is pretty bad as an investment. But with that being said, let's just take a snapshot of all the different markets. So we talked about equities, we talked about a lot of different things. We'll go deep into the numbers. We'll look at unemployment. We'll look at oil. We'll look at gold, currencies, GDP, inflation, housing. We'll just look at all the reports. So let's look at the snapshot. Oh yeah, and by the way, the numbers that I just read are not total return because it does not include dividends or splits. It should not be used to benchmark performance of specific investments. Very important to note. So in reality, the S&P 500 was actually up more than 28% if you factor in dividends and things of that nature. Now let's look at the snapshot for 2019, the markets. Start with the equities. The year 2019 was a solid one for investors. I mean, I was a happy investor. A year after one of the worst fourth quarters since the Great Recession. So in 2018, at the end, we had a terrible run. Stocks rebounded to close 2019 with several major indexes reaching record highs. During the year, investors faced a yield curve inversion for the first time since 2007. Of course, people panicked. They were scared. They're like, oh, a recession is coming. And basically, there was a slowing economy and a constant barrage of positive and negative information on the trade war with China. Nevertheless, investors stayed the course for most of the year, pushing stocks to their best year since 2013. Each of the benchmark indexes listed here closed 2019 in fine fashion, led by the tech stocks of the NASDAQ, which gained more than 35%, the large caps of the Dow 23.34%, and the S&P 500 of 28.88%, also fared well by year's end. The small caps of the Russell 2000 began the year on a tear, ending February up almost 17%. However, the small cap benchmark index pulled back some in March, but remained a steady gainer for much of the rest of the year, closing 2019 about 24% ahead of where it started. So it still did pretty good. The global Dow gained about 19% on the year, despite ongoing Brexit turmoil, frequent terrorist attacks, and overall global economic weakening. Now let's look at bonds. Not a big fan. I don't own a single bond, but it's good to be diversified. But let's just say bonds are not the most attractive thing in the world right now. U.S. Treasury yields swung dramatically in 2019, ranging from a low of 1.43 to a high of 2.80%. Investors were a bit unnerved in March when a recession indicator, an inverted yield curve, which occurred for the first time since 2007. That's what caused a lot of panic. That was actually probably the lowest, the biggest drop in the stock market that we had all of last year because of this inverted yield curve. That's what happened when the yield on the U.S. 10-year. So what an inverted yield curve basically means is that it's basically when the yield on the U.S. 10-year treasuries fell below the yield on the 3-month note, a potential sign of an economic slowdown. If you think about it, why in the world would a yield on a 10-year treasury, something you're holding for 10 years, why in the world would that be lower than something that you're only holding for 3 months. It makes 0 sense whatsoever. But basically, that's what happened. An inverted yield curve, basically, meaning that if you think about it, it's inverted. So the opposite happened, basically. But however, the yield inversion was short-lived. It was very short. I mean, investors panicked. People sold. They lost money. Smart investors kept their money in, and they bought more, and they took advantage. That's how you make money in the stock market. You buy low and you sell high. You don't do the opposite. You don't sell low and buy high. You buy low and you sell high. Unfortunately, when these things happen, people tap into their emotions, and they let their emotions make the decision for them, when they should be letting the numbers and the statistics and the facts lead them. But investors saw a steadying economy, modest inflationary pressures, and continued job growth, all of which helped ease investor concerns. Overall, the yield on the 10-year treasuries closed at 1.91%, about 77 basis points below where it began the year, as rising bond prices drag yields lower. Bond yields move in the opposite direction of bond prices. So if bond prices are going up, then that means bond yields are going down. Now let's look at oil. Oil prices began 2019 at $46.54 per barrel and continue pushing higher, reaching a peak price of $66.60 per barrel in April. During the year, oil prices fell in the summer months, averaging about $54 per barrel. Oil prices spiked nearly 20% in September, reaching almost $63 per barrel, only to fall back again in October. Since then, prices have climbed steadily to their year-end price of $61.21 per barrel. Ultimately, oil prices closed 2019 with their largest yearly gain since 2016. WTI crude has climbed nearly 36% from its January opening price. Now let's look at interest rates, or FOMC. The Federal Open Market Committee, or FOMC, lowered interest rates 3 times during 2019 after raising them 4 times in 2018. Each time the target range decreased by 25 basis points, or 0.25%. The first rate drop occurred in July, followed by a rate decrease in September and a final rate cut in October. The committee left rates unchanged following its last meeting for 2019 in December. For the year, the target range has decreased 75 basis points from 2.25% to 2.50%, down to 1.50% to 1.75%. Following each rate increase, the committee noted that inflation continued to run below the committee's target rate of 2%, or the committee's target 2.0% rate. Business fixed investment and exports weakened, and global economic developments were uncertain. So the Fed got scared, and they basically wanted to lower interest rates because they didn't want a recession or anything to fear and basically make investors fearful. Nevertheless, the overall view of the economy is favorable, so we're still doing good. No need to panic. And a higher bar will have to be met before further rate reductions are suggested. I think we'll have some more rate cuts this year. So if you're a real estate investor, or if you are an investor in general, somebody who likes to borrow money for investment purposes, of course, then this would be a great time to take advantage. Now let's look at currencies. The dollar maintained a relatively strong position throughout much of 2019. The United States Dollar Index, or DYX, which measures the U.S. dollar against the currencies of several other countries, ranged from a low of 95.02 to a high of 99.67, ultimately closing 2019 at $96.92. Does that really mean anything? Probably not. But basically, the dollar maintained a relatively strong position. So the U.S. dollar is pretty strong right now. Gold prices rose over 18% in 2019. Ironically, usually when the stock market is up, gold prices go down. But somehow, some way, gold prices also went up. So the theory might not be true anymore. But gold prices began the year at $12.78.30 per ounce on January 1st. Prices hit a low in May of $12.67.30 to a high in September of $15.66.20. The price of gold closed 2019 at $1,520. Now let's look at last month's economic news. Employment. The unemployment rate inched down 0.1% or 0.1 percentage point to 3.5% in November, as the number of unemployed persons dipped from 5.86 million in October to 5.81 million in November. Total employment rose by 266,000 in November after adding 156,000, which was a revised number, of new jobs in October. The average monthly job gain through November is 180,000, and it was 223,000 in 2018. Notable employment increases for November occurred in manufacturing. Manufacturing added 54,000 jobs. Healthcare added 45,000 jobs. Professional and technical services, which is the industry that I'm in, added 31,000 jobs. Leisure and hospitality added 45,000 jobs. And transportation and warehousing added 16,000 jobs. The labor participation rate fell 0.1 percentage point to 63.2%, and the employment population ratio remained at 61%. The average work week remained at 34.4 hours for November. Average hourly earnings rose by 7 cents to $28.29. Over the last 12 months ended in November, average hourly earnings have risen 3.1%. So basically, this means that the economy is still growing. Wages are growing, and things are looking pretty good. Now let's look at last month's FOMC, or interest rates. The FOMC met in December for the first time since October. After dropping interest rates for the third time this year, in October, the committee elected to maintain rates at their current target range of 1.5 to 1.75%. The committee's next meeting is January 28th through the 29th, so at the end of this month. Let's just do a recap of GDP. According to the third and final estimate of the third quarter gross domestic product, or GDP, the economy accelerated at an annualized rate of 2.1%, up from second quarter's 2.0% annual growth rate. The first quarter saw an annualized growth of 3.1%. Growth in consumer spending, personal consumption expenditures, which accounts for roughly two-thirds of GDP, slowed from 4.6% in the second quarter to 3.2%. And then let's just skip a little bit. So individual income taxes accounted for the majority of receipts at $106 billion, followed by social insurance and retirement receipts, $97 billion. Corporate income taxes accounted for a little over $0.5 billion. I mean, that's insane. Basically, what they're telling you is corporate income taxes only accounted for a little over $0.5 billion, while individual taxes accounted for $106 billion. I mean, that alone should tell you why you should be a business owner. That's insanity. So it's a stat that you might want to pay attention to. One of the reasons why I decided to become an entrepreneur was because of taxes. I didn't want to pay as much taxes as I used to be paying. Now I pay about 90% less taxes than what I used to be paying. Legally, of course. But just something to consider there. So according to the Personal Income and Outlays report, inflationary pressures remain weak as prices for consumer goods and services rose 0.2% in November, the same increase as in October. Nothing really there. Now let's look at housing. Very important target, or very important statistic to look at. The housing sector has been anything but consistent this year. I mean, housing has been atrocious in 2019. After rising 1.9% in October, sales of existing homes dropped 1.7% in November. Year over year, existing home sales are up 2.7%. Existing home prices advanced in November to a median price of $271,300 compared to $270,900 in October. Existing home prices were up 5.4% from November 2018. Total housing inventory at the end of November sat at 1.64 million units, representing a 3.7 month supply, down from October's 3.9% inventory rate. After falling 0.7% in October, sales of new single-family home advanced 1.3% in November and are 16.9% above the November 2018 estimate. The median sales price of new homes sold in November was $330,000 and $800, which it was $316,700 in October. The average sales price was $388,200, up from $383,300 in October. Available inventory at a 5.4 month supply remained about the same in November as it was in October. So overall, I mean, housing didn't do terribly bad, but I mean, basically, it was very inconsistent. I mean, the housing market was a little atrocious. Industrial, so let's talk about manufacturing a little bit. Industrial production and manufacturing production both rebounded 1.1% in November after decline in October. Let's look at imports and exports. Both imports and export prices inched higher in November. International markets, British Prime Minister Boris Johnson's Conservative Party scored a resounding electoral victory in last month's parliamentary elections, likely securing Britain's exit from the European Union or EU or Brexit. The gross domestic product for Great Britain rose 0.4% in the third quarter, lifting the annual economic expansion to 1.1%. And what is claimed as support for more open trade globally, China agreed to cut import tariffs on frozen pork, pharmaceuticals, and some high-tech components beginning January 1st, 2020. Consumer confidence fell again in December for the second consecutive month. Now let's look at what some people are predicting for 2020, and then I'll tell you my prediction. Economic growth slowed in 2019, but not enough to prompt investors to avoid stocks. Fears of a global economic slowdown continuing into 2020 may affect the U.S. economy as well. The housing market hasn't picked up the pace and is generally lagging behind other economic mainstreams. So housing is lagging right now. Ongoing global trade negotiations between the U.S. and China should bode well for the U.S. and global economies. Ultimately, our economy, equity markets, and standing in the world depends on the outcome of the impeachment proceedings and November's presidential election. So now, a moment of truth. What do I think about the 2020 economy or the 2020 market? I think 2020 will be a fabulous year. I think we'll be up in the stock market. We'll probably be up more than double digits in the S&P 500. I think we'll do just fine. However, we do have to be very careful of really four things, and they all have to do with politics. The first one is the impeachment of our president, Donald Trump. If that happens, or if and when that happens, that could cause some turmoil in the economies, or it can cause some expansion. The second one is the November presidential election. Who knows who's going to win? Whoever wins will affect the markets. The third is the trade wars between the U.S. and China and other nations. Always constant clashing in 2019. Last but not least, this is recent, Iran versus the U.S., a new war that's pretty much in the works. So they all have to do with politics. So if there's anything that could cause a recession in 2020, it would be those four things. Overall, I do not think a recession is happening in 2020. It's just too many careful people nowadays. And for example, the Federal Reserve. Some people are careful now. Some people are reckless. I won't mention any names, but there are some careful people that are in charge of some of these decisions. So 2020, I don't think we'll have a recession. And I believe that the stock market will be up in the double digits this year, 2020. Now, let's fast forward to January 3rd, 2020's market report. Let's see what actually happened in the markets. A strong start last week for the benchmark indexes. So this report is as of January 3rd, 2020. Was wiped out by rising tensions in the Middle East. So we had to deal with China. We're still dealing with China. Now, all of a sudden, the Middle East, now we have a problem. There's a war. Only the Nasdaq was able to close slightly higher last week, as the under benchmark indexes listed here closed the week in the red. Nasdaq is composed mainly of technology stocks. Both the Dow and the S&P 500 lost value, as did the global Dow. The small caps of the Russell 2000 had the worst week-over-week performance, falling about 0.5%. On the other hand, oil, gold, and 10-year treasuries pushed higher last week. Oil prices continued to climb last week from $61.72 per barrel to $63.05 per barrel. The price of COMEX gold rose higher from $15.60 per ounce to $15.53.30 per ounce. So far this year, in 2020, the Dow Jones is up 0.34%. Nasdaq is up 0.54%. S&P 500 is up 0.13%. Russell 2000 is down 0.46%, probably due to the global tensions, and all that good stuff. And global Dow is up 0.23%. And interest rates have not changed yet, but they might change when the FOMC or the Federal Reserve meets later this month. 10-year treasuries down 13 basis points are currently now at 1.78%. So there you have it, the 2019 market recap. Overall, we did great in 2019. We did fabulous in the U.S. The rest of the world didn't do so well, but overall the stock market, or the stocks across the globe, still did pretty good. So 2019 was a fabulous year. It was the best year that we've had in a long time. I hope and pray that 2020 will be similar. We'll continue to have gains. We'll continue to rise up in the stock market. Hopefully this war between the Middle East and the U.S. won't continue, and we'll settle and we'll negotiate. Because if it does, I mean, that would mean some trouble. I'm sure we all know what happened with 9/11. I actually came to the U.S. a month before 9/11. So it's crazy. So hopefully that doesn't happen, because if it does, that's what could lead to a recession. So I hope and pray it doesn't happen. It's not looking too good right now. There's bombs flying left and right between the countries. And I really hope for the best when it comes to the economy, because all these things, when bombs are flying in the air, investors get scared. They hide their money somewhere. They take it out of the stock market, which reduces the supply, or which reduces the demand, which pushes down the prices. And as an investor, we don't want that. We want stock prices to continue rising. But if and when they do go down, because what goes up must come down, that's an opportunity to buy. You don't sell in a down market. You sell in an up market. It's buy low, sell high. It's the same principle that applies. So overall, I mean, even if the stock prices do go down, it's an opportunity to gain. And how do you gain? You listen to shows like this. You stay in the know. You continuously educate yourself. Beef up your emergency fund. So this is the time to, if you're at 3 months, maybe start pushing the 6 months emergency fund. If you don't have an emergency fund, you need one as soon as possible. Because and I don't think a recession will hit in 2020, but if it does happen, that's where those without an emergency fund really start getting hit. So with that being said, thank you all for tuning in to WJC 98.3 FM, your voice and music, your station. My name is Chef Badu. Remember, this is Money Talks. We'll deliver this every Monday night, 7 to 8 p.m. Central Time. I hope to continuously deliver you all some content. It is tax season. If you need your taxes done, please call me, 773-679-7198. Next week, we'll be talking about the tax season. We'll be going through some best practices, tips, and tricks. My firm does do taxes. So if you need your taxes done, please feel free to reach out, 773-679-7198. You can email us at support@badutaxservices.com, SUPPORT@BADUTAXSERVICES.com. We're more than happy to help you. We move pretty quickly, and we can guarantee you that the work product will be delivered efficiently and effectively. Thank you all for tuning in once again. WJT 98.3 FM, your voice, your music, your station. I look forward to continuously delivering you all some content. Thank you.
You're listening to WGHC 98.3 FM.
Spoil you, but we are nothing's friend. From see you the first time, want to trust and send. Gonna me spoil you, get anything you like. Long as you are right, then me alright. Me know your man, that's why I'm alive.
Your voice, your music.
Whether me in a skirt or jeans.